Thank you all for coming. It's the photo of my life, sitting at the head of the table with Satish Pai and Jayanta Karya next to me and others. So, but then that is the nature of the format. So, we'll have to go with it. Just a quick recap of what we spoke about that day is that we have a target of becoming a developed country by 2047. But the point is, even as our economy is growing, our GDP is growing, we are justifiably among the top 5 largest economies in the world, the fastest growing major economy in the world. And we want to be 30 trillion. We are at about 4, I believe, right now. 30 trillion by 2047. These are all very good targets to have. Of course, very challenging targets as well. There are a lot of issues that need to be papered over, that need to be worked on. But at the same time, what is also important is that our people need to have a standard of living that is sort of in sync with what a developed nation should have. So today we are here to discuss in pursuit of extraordinary growth and scale. How many Indian MNCs are worth calling MNCs in India at this point? Right? We have maybe Tata Steel, Tata Motors, Hindalco, JSW. But otherwise, beyond these 3-4 names, maybe Reliance, but Reliance is not so much global, mostly in India. Adani still coming up. There's really no widespread efforts. I mean, there may be effort, that's the wrong word to use. There is widespread Indian, scaling up happening. With all the private equity money and all coming in, also, the scale up is happening in certain areas. We have startups that are now really big, but are they of global size? Can they be of global size? And what are the challenges towards that end? And do we really need global size? Is it really helpful? We can go about and say, how can we grow bigger and bigger and bigger? But you grow bigger beyond the point and then the regulator says, split you into 2, split you into 3, right? You're too big for the market. But ultimately, this whole discussion is to the purpose of how can we create more equitable economic opportunities for Indians in this country. That is the core of the whole thing. So if you are investing in capacity, if you are going to start a new plant in India or the overseas where you want to send the people from our country, that is going to develop a lot of new economic momentum. Because it's not only about the people you are hiring or the customers you are selling to, it's also about the entire ecosystem, all your ancillary units that are going to come up. They employ their own people, right? All your vendors, suppliers. There's a whole ecosystem that builds up around anything new of scale that comes up. So initially, we'll start with some opening thoughts from all of us. So we'll go across. So we'll start with you, Mr. Pai.
So, opening thoughts, I think, because I represent the manufacturing and sort of mining industry, um, I think that we have probably a once in a lifetime opportunity now for because of various geopolitical factors. The tension between US and China and the whole thing between Western companies and their issues with dealing with China means that they are all looking now for an alternate place um, to do more manufacturing. And I think in India, we have never really focused a lot on manufacturing. If you look at manufacturing as a percentage of GDP, it has remained at that 13.5% for a long time now. So I think that means that we have that opportunity. Now, the question is, how do we take advantage of that opportunity? And this is where, when people come into India, it's take Apple. When they came and talked to us, they said, okay, in China, we did like this. Can you replicate there? And in the first meeting, I had to tell them that what you did in China, you cannot do in India here. So you can't run a sweatshop, you can't do, it's a democratic country, there are rules, regulations. But all that being said, I think that how quickly we can scale up the opportunity in manufacturing, I think is going to be critical for that. There are other sectors that will play their role, but manufacturing has to play its role in the future of the country if we have to get to that, because it provides steady jobs, it provides a reasonable level of income. And more interestingly, it provides those jobs in what I call the heartland of the country. So the plants of Hindalco or JSW, they are not in Bombay and Bangalore, and they are in fairly remote plants. In fact, Kalahandi, you mentioned, is where one of our biggest bauxite mines is. So the ability to provide people who live in that area a quality of life and jobs that have got that type of level, I think is going to be critical if India is going to move towards being a developed country. If you actually compare us to China, we are far richer than China in many of the natural resources. So I think that there is a great opportunity for us. But now to do that, you have to be like the Indian cricket team and be able to play in any pitch anywhere in the world at the same level. So Indian mining has to be of international standard. Indian manufacturing has to be of international standard with international quality. So I think that's why we have the opportunity. We have to do these things, but we also have to up our game when it comes to people, technology, process, quality. All these things now have to go up to an international level so that it's competitive. Mr. Acharya.
Yeah. No, I think so. India today, I totally agree with Satish and you. What you mentioned, fastest growing major economy in the world, weak global backdrop. We see geopolitical issues in the rest of the world, which is luckily not seen in India. We have some, but I think we're pretty balanced. We have by and large a political stability. We have reforms which have been undertaken over the past few years, which has brought us to a level of, let's say, economic growth. So the opportunity going forward, I would say that it's again a lifetime opportunity. On a per capita income, which you mentioned today at, let's say, 2,500 odd dollars last year, I think we will get to probably close to doubling it or just closer to doubling it by the end of the decade. The opportunity is that it can become probably 3x if you really look at a decade from now. And that's happened to countries. If you look at China, if you look at Japan in 1970s, if you look at Korea in the 1980s, and if you look at China in 2010, mid 2010, all of them have by and large doubled in this 10 years or so, little more than double in 10 years or so. So India's opportunity is during this period. I would say a decade will be a very, very important phase for India's growth. The other thing is that India is in a nation building phase, from whether it's infrastructure, whether it's manufacturing, whether it's now the energy transition which has come into India. India is very well placed. We have stronger sun for longer. We have wind. We have a big coastal line. So the opportunities on the energy transition for us also is quite good. And the fourth piece is the consumption. Consumption, as the per capita income grows, we see the discretionary spend increasing, which will increase your housing, which will increase automotive, increases appliances, consumption in various forms. The other good thing which has happened over the last few years is the digital interface. Now, apart from the physical infrastructure, the social infrastructure, and the digital infrastructure, which the government has done into the rural, if you really look at it, the rural landscape is changing very fast. Today, the connectivity of the rural to the urban is becoming more and more seamless. Rural businesses are becoming much more agile and are able to deliver not only to the urban, maybe international as well. I'd gone to Jodhpur, the other day, just mentioning a actual story. We went to a village which was an hour away from the hotel, and it was a thatched hut in which these dari weavers were there. They weave the dari, and it's a family which is there. The thatched roof is built by the same gentleman along with his family, and he's doing the weaving on one side. He has got a so-called thatched roof, which is a showroom, and he's got on the backside, that's where his family stays. And weaving is beautiful, and he's able to do this and show to you how he's doing that. And then you go inside to the so-called showroom and see what all is there. And we did like some, and we said, okay, fine, we'll pay. So we said, how do I pay? So he said, no, that's not a problem. He takes out his phone and he says, you please Google Pay to me. So we did that, and then we said, okay, we'll have to carry this. He said, no, not required. I'll get it couriered to you. So there are guys who are there in the city who will come pick this up and get it couriered to you to Bombay. So absolutely seamless experience if you were to look at it from that perspective. So I think the digital side has really enabled India, connect India to the overall greater India. So the aspirations level, if you really were to look at it, the hinterland has gone up very sharply. So during this phase of nation development, I think we will see infrastructure, we will see manufacturing really pick up. And that is where manufacturers like us see a huge opportunity. And we are building scale. So our capacities, the steel industry in general has increased capacities. And while it's a capital intensive sector and there are risks, you can't look at it on year, you'll have to see it over a longer period of time. But the opportunities are really very good. We are quite optimistic about the growth story of India for probably a decade or two. And that's where we would like to participate.
Mr. Sirak, thank you. Good evening to all. I thought I will just take a little different perspective. I think you both represent large companies, large sectors, which have somewhat consolidated and play at the global scale. But I think the opportunity for India, and also kind of what I focus on, is more niche segments, whether it is emerging industries or niche kind of industry segments where capital has been generally lacking. That's where private equity come, and I come from a private equity investing background. So when you look at sectors like that, I think it's a game of execution, because quite often you're dealing with entrepreneurs who have very different approach to how they run their businesses, and almost very different risk reward or cost of capital, or however you quantify it. Some of them may have been inherited a business which it's a lifestyle business. Some of them may have had some asset stuff which they kind of monetize and fund their businesses. So essentially you're not operating on, I'm talking about these niche segments, and I can point to several, and I'll give some examples where you're actually competing in somewhat of an irrational way, right? Where the pricing is somewhat the pricing discipline is poor, because people are just trying to run their business whichever way they think about it. And I remember when we looked at a segment, cash logistics business, right? Somewhat of an unorganized business. There were 8-10 players, and then we figured out that 100% of the money is made by one company, literally 100%. Actually at some point, even 110%, because they were operating better, they were disciplined about it, they were, kind of calibrating their cost of capital in the right way. So, and more importantly, executing so well that eventually that player kind of slowly, absorbed or acquired many of the other competing competitors, and kind of evolved as a real national player. Now that's an opportunity for them to probably go international. So I think, if you take the example of, our own business, one of the companies that we run is Goguldas Exports, which is a garment export business, which is a low value, somewhat of a tough business. But I think, and it's a very fragmented business with large number of players, and with the structural changes in the industry, and without operating very well, many of them have fallen aside. That has created opportunity for some 3-4 large companies to come up, and kind of now has the opportunity to play at the global scale. Mr. Chabria.
So I also come from the manufacturing space, but as a conglomerate, we also have real estate. We have an NBFC business as well. So I have the benefit of sharing my experiences. So I buy into the story that growth is here to stay. Manufacturing as a sector is certainly likely to see certainly sustained level of growth. Players with scale already have the advantage, because scale makes execution relatively easy. Cost of capital is low. We can invest. We have the ability to put more capital to work. But I'm going to challenge the thesis in a different way. So I'll just tell you where the challenges are. Mr. Pai talked about mines. Mr. Acharya is familiar with mines as well. So we center has one outlook towards industry. States manage differently. The center and states coordination doesn't work in the same breath. So it's easy to say I have a mine, but to operate a mine and start a mine, not that easy. To start operating a mine and to make it work efficiently, not that easy. And I'm saying if we can still as industry thrive in this chaos, if chaos is removed, we'll do better. So it's for policymakers and administrators and bureaucrats to realize the importance of enterprise and allow them to prosper with better scale. And it's only a little bit of tweak in the mindset which is going to make this actually become more efficient. And it transcends. Mine is one example, but I can give you examples of, let's say, power. So let's say we're all trying to go green and investing. But if I have to put up a solar park and need to evacuate power, I have to go back to the state discounts. The state discounts have their own issues to deal with, and therefore it's not easy. I'm saying industry is willing to invest, private equity is willing to provide capital. We can put capital, banks will be happy to lend money, but still the final stumbling blocks are going to be somewhere within the state machinery arms. Discoms are owned by states, and at the local level, without them, you cannot evacuate power point A to point B. Now, that cost is also pretty high. If you ask me, for their inefficiency, we pay. And if we can address these parts, we will be still more globally competitive. We are already competitive in many sectors of the manufacturing space, but should these challenges be addressed, it becomes that much more easier for us to deliver superior or better returns and then reinvest that capital back to scale up further. The ability to scale to be sustainable, green power, green energy, solar, everything is there. It's not for want of enterprise that we can't do it, but these things hold us back. The third part of the exercise is people. We don't generally talk about people, but people is a challenge. If you were to ask me, we all say, and we also have factories in the hinterland. Today, to send top talent to the hinterland to make them stay, if you don't have an ecosystem of a social connect, schools, colleges, and the whole vibrant ecosystem of social infrastructure connectivity, trust me, it's difficult to maintain top talent in the hinterland. Workers will work, but it's not easy to make that happen. So while the country says 140 airports, new railway connections, we need to speed up the level of investments there. There are people here who also set up hospitals. Just imagine the need for medical assistance and health in the hinterland. If it exists, you can make people go and work. You can set up faster. Not difficult at all. We talked about, like, we represent the NBFC, fintech. India had a great advantage. We have enough and more software talent that we can write codes, we can write programs, we do great aggregation models, we connect activation, fulfillment to activation, we can do it all. But the regulations are such that it doesn't allow a lot of enterprise to succeed. And quite a lot of these enterprises have moved away to Singapore and Dubai. When I can give you examples of other industries, the entire gaming industry has actually shifted base from India, all outside India, to Dubai or to Singapore. We lost the opportunity. We are losing it right now on cryptocurrencies as well, by the way. The guys who run cryptocurrency platforms, we could have run the full exchanges here. We don't do it. The last bit is in the finance stream. We all talk of a very, very vibrant equity market, but why is there no vibrant debt market for the retail? This is also a policy issue because the banks are so used to funding the government of India for its own debt or the state government's own debt. And the channel is that you put money in a bank gets the FD, and FD then happens to be the way for the conduit to fund the government deficits. But if you create a vibrant exchange and allow all of us to put, it will actually curtail the flow of money in the banks and make the entire system much more vibrant. The government of India can also come and raise money through debt markets if it wants to. But today also, if you see, the government of India does not do certain elements of this policy framework to encourage this to happen. I will have to invest money into a mutual fund, which then can buy government securities. Why am I not allowed to buy government securities on my own? Create a vibrant structure I can create in and out. The last bit is policy stability. So I'll just give you an example. If I were to go and set up a new enterprise based on tech platforms, and Dubai is an example. I can actually go there, get my registration done, pay $200. I can start the business the next day, the second day. No questions asked. 9% tax rate, 15 years, no change in tax rates at all. And here, every year, we guys sitting here on a table, prepare an EOP and wonder what will happen to GST rates, what will happen to tax rates, and then how do we plan? So eventually, money, net present value of cash flows, and then eventually you got to invest for terminal growth to sustain. It's a wide topic, but this is for policymakers to then understand we have it, we have enterprise, we have consumption, we have people who can provide all of it, but you need all of this to work together to make it work. So that's my submission.
Thank you. Very well said. In fact, but the only problem is the tax doesn't change, then we'll have nothing to write. See? It's a big thing. Budget will come and there'll be so many changes. We will keep writing on it. Wake up.
So I'll break the chain of business thought and bring in some perspective from a legal practitioner standpoint. So I think no doubt that if you have to achieve Viksit Bharat and 30 trillion and all of that, that we need to boost our manufacturing. I think over the last couple of decades, our GDP, the major contribution is from services. Manufacturing is about 20-25% balance agriculture. So we need to bridge that gap. So how do we boost that manufacturing, right? We've already done, the government has done a bit. We are now the second largest manufacturers in mobiles, for example. Make in India, PLI schemes, a lot has been done. But how will they now reconcile that with changing dynamics? So for example, with the Trump administration now, there is a huge advantage, as Mr. Pai mentioned, in terms of them taking on China head on, right? But at the same time, they believe in America first. So how do we reconcile America first and make it India? Our biggest FDI investor is the US. A significant amount of FDI comes from US. How do we keep that momentum going? How do we increase that? Because at the end of the day, if you have to increase growth scale, a lot of that comes through M&A. A lot of that comes from FDI. Are we enabling that ecosystem, or are we creating a regulatory framework that is not so encouraging? In infrastructure terms, we often talk about the missing last mile connectivity, right? We have metros here, but you get off at BKC, you don't know how to get to your offices. I think that's very true of our laws and our regulations also. We have somehow not been able to give that last mile connectivity to spur growth, to spur scale, to increase M&A. How do we make it easier for folks to acquire companies, delist them, take them private, grow them, acquire more companies, etc. So that's one area that I'll talk about as we go along and we need to work on.
Sekanda.
Yeah. So, having heard interesting views from all of you, I am in a softer sector, if I may say so. The healthcare is like the infrastructure, but like the social infrastructure. So, to just give you a perspective that how important it is that for a 1.4 billion people, sector is pretty small actually. It's only 4 lakh crores today. But if you see the issues one can look at access, availability, affordability, and accountability, if you want to look at it that way. So access means there is not enough providers, so there's not enough beds. To give you a perspective of how it helps the economy, is that today there is as per the WHO standards, there is a shortage of 2.4 million beds in the country. Now, if you want to build that, the infrastructure and the capital spend on that is $210 billion. So that means if money comes, that will give a spur to the economy. So there is a positive side of just providing more beds. The other side, which hardly people talk about, in a healthcare sector is a very high manpower intensive sector. So if you take a quaternary hospital like how we have, the ratio is that for one bed, you generate 7 jobs, direct jobs. Indirect is around 30. So that means if you are even if you are talking about, there are primary, secondary, etc., we are talking about more than 4 crore jobs in the country. So when the economy is growing, and I heard you and you talking about manufacturing is growing, but a lot of manufacturing is growing with less people. So people also need employment. So that's where healthcare will come. So access will take care of that. The other issue about the affordability, and people, we have in India, we have a mindset of being poor, that we are cheap, we are poor, so everything should be cheap, 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 cheap. But as far as I am concerned, and I've voiced this in many places, is that a human being in India is same as a human being in the US. So why should you deny the level of care? The only difference is your ability to pay. The body is the same, so the equipments are the same, everything is the same. So instead of the government being the provider and the payer, just move to being the payer, like they've started with Ayushman Bharat, etc., etc. If you have the ability to pay, then you can scale up and say, okay, this is tier 1, tier 2, tier 3, and you have a Maruti and you have a Merc, so you have a difference there. The other thing is about accountability, and we hear about it, that how will this happen? So there are quality standards and all that. But before I close, I just want to say that we don't understand the impact of how important health is. I think Vishal was saying before. The current NCD, the non-communicable diseases which exist in the country, the diabetes, the cardio diseases, etc. If it goes at this stage, by 2030, 2% of the GDP will be lost. So which is, it's a quantifiable impact of health on the economy. That's one. The other thing I want to say is there is an opportunity with digital, and I'll talk more about it on how to do that, and how to bring India, like Government of India has an initiative called Heal by India and Heal in India. So which is the medical tourism part. Now currently it is 6 billion, and we were talking before that compared to Thailand, we are like nothing, Turkey, and there's a huge opportunity. So there are things which we can do to improve the healthcare sector, and the focus is, and there are many areas, and we can talk about it, that if you look at the economic growth, and sometimes what happens is even our government is guilty of saying that first let us get rich, then we will become healthy. But I think we should be at the same time. We should be healthy and be rich at the same time. Otherwise, it's of no use. So there is a lot of opportunity in creating new systems, and opportunities in healthcare, in physical, digital, tourism, adjacencies. And I think I'll talk about that later.
I think all of us are trying to make a point here, which is about friction. And we can discuss the social contract and how parts of India need to get better and parts of India are doing very well. So if you break up your per capita GDP and you take the top 15 cities and you look at India in those top 15 cities, the numbers are very different, and that's driving consumption in a very different trend. But frankly, I think the focus of everybody, including the government and private sector, needs to be literally top down on GDP growth. Because what really matters today is GDP growth. And very quick, I'm not an economist, but a very quick breakup, all of us know in GDP is consumption, investment, government spending, and exports, right? And today, India is uniquely positioned to be a leader in all of that. We have consumption, and with per capita GDP increasing, consumption is going to get stronger. Corporate balance sheets have never been better. Lowest leverage ratios, highest margins across corporate India. So there is a lot of capital which corporate India can invest. Government, pink of health. Oil has been pretty stable, which is the largest sort of deflator of government money for India, right? Has been stable, and India has done relatively well during COVID, not spent, not burned. So fiscally very responsible, and governments in 80% debt to GDP, which is way lower than 105% of the US today. And you really have an opportunity to export, because nobody wants to buy from China, especially the US. So you have all 4 factors of GDP completely in favor of India today. The question is about friction. If I just hear all of you, everyone is facing friction, whether it's mining, whether it's healthcare, whether it's state versus center, whether it's NCLT approvals not coming in time, right? It's all friction. So, how does the government set up, right, a task force internally which just basically reduces friction to drive GDP growth? This is something that all of us together should pitch. It, just get approvals to be faster, right? Just hear us more openly, trust us more openly, and let GDP, grow faster. If GDP grows faster, you'll see the benefit of that. As Jayant said, in 10 to 20 years, per capita GDP will ramp way faster because population growth is not going to keep up. So that's just the macro point. Another point is today a lot of the growth pressure, for lack of a better word, is really with the large companies, right? All of you large corporate groups or large PE investors. If you look at the US, 150 million people in the US, it's half of the US population, right, is employed by 25 million MSMEs, right? If India has to employ half of its population, India is a much younger population, right? In the world, the youngest today. 750 million people, if we have to employ over the next 10 years, right? Just going by the same ratio of average number of 6 people per MSME, you need 125 million MSMEs. India is not even at 15. So, how is India in the next 10 years gonna grow 10x? It's small businesses because large businesses don't need people. Every single large business I talk to in manufacturing is not a story of people. So to your point, Gautam, you need more healthcare. You need smaller businesses. And is there a way private sector plus public sector can work together? And instead of having smaller supply chains, concentrated suppliers, larger distributors, find a way where smaller businesses flourish, and that's how employment will, long term, be a positive factor for India and lead to consumption. Yeah.
But Vibhor, I'm not coming to you last because you came in last. But
Thank you.
let's come to you.
No, I guess it's fair I get the toughest job and to speak after all the accomplished panelists. But I guess what we are talking here is what can we do more? What can we do better? And I guess there is a subcontext to it that we are doing well. We are doing fairly well if we look at what we achieved in COVID or UPI/Aadhaar, or the fact that the democracy is doing fine, especially in the context of some of our neighbors, more than some of our neighbors. And the elections, and all of us read some news reports published in Mint of how some of the developed countries take their times, and the aviations and the airports and the Blinkits and the Instamart. That service is not available anywhere in the world. Anywhere in the world. And I don't think it's going to be easily available.
So commerce, the quick commerce day.
Yes.
It takes 10-minute delay.
It's not available anywhere. You can be in London and New York, not happening. But so we are doing very well. And irrespective of the metrics we see, but sometimes short term may not give us the right picture. We are doing well in the context of the size of the problem that we have. Because if we like Vishal mentioned about population and the fact that we are developing, I think we're doing fairly well. I'm glad that a little over 2 decades back, I let go of an opportunity that was paying me 9x and decided to join Morgan Stanley after some time. So things have worked well, and we learned that doing more and better is all about capital and labor. And for the first 10 years, that used to be true because everything used to be about FIIs and how they had tax incentives and getting the money. But today, capital is not a problem. If labor is a problem in India, then we are really having a problem. So I think in the end, it will come to somewhat of more government friction that Vishal spoke about. But before I touch more on that, how do we do more, given Alokesh, you said that let's talk the specifics. Look, we have done great in IT, pharma, services, chemicals. We are doing something in textiles and manufacturing. But there is enough that where we can do a lot more. Tourism, absolutely nothing. All of us are going abroad, or the entire middle class is going abroad, and everybody is going to Goa twice a year. It can't sustain. Education, I think it will be the next oil in a decade or two. That would be the biggest currency charger for us. For the talent, we have legal outsourcing. Infrastructure, you started with Bangalore.
Bangalore was all about cities. So I'm hoping that someday we'll have an IPO about building a new city. Maybe for IT, maybe for education. Enough sectors to do well where we had done better. How do we do well? More domestic focus. We all of us spoke about judiciary, police, taxes, all the even the MNC companies, forget SMEs. The amount of time KMPs are spending on the taxes after fair openness in paying whatever is required is not funny. The state center relations, everything on the concurrent list is not as good as what it is on the central list. Divestments, the election timings of state and centers, the debt market, the bureaucratic reforms. There is a whole list that we can do so much more. But I think the clincher is how do we do that? Because if anything had to happen alone, it would have happened by now. I think everything that is not happening is where there is a intersection required, is where there is an interface required, is where there is a friction coming through. And I learned through the 2 decades of private equity that for the smart Indian entrepreneurs that we engage with, sometimes we are still able to add value and create magic because we come from a different perspective. And when two perspectives meet, there is magic. Here there are bureaucrats and government and all, but that interface is missing. And some of the other interfaces that we have is more for social get-togethers and visibility. But the openness to actually interact and engage and figure out a common solution can actually create wonders. So if there is one thing I would pick up is how does the private and the government sector create an effective interface to engage on these 10 and 20 more topics. If we can do that one, which means make of our FIIs and CIIs a lot more effective and make people more open to engage and listen, just engage and listen because it will make sense after some time. I think the rest will also happen. I'll pause here. Thank you.
Okay. So I want to now throw this open to everybody. And I have got some 35 questions which I cannot ask because we don't have enough time. But in the mid 2000s, when we as journalists wrote these stories about Marvelous and about Chorus and all, we were thinking this is the beginning of a new era of Indian multinationals really coming onto the scene and cracking the world and all that. Where did we fail or have we failed at? Is it a matter of confidence that we are just not confident enough to go and buy a company that's bigger than us? How is it that a Samsung and a Hyundai and a Toyota can go and become market leaders in all countries that they go to? We can't, right? So where is the issue from an investment point of view? Because you invest in companies that grow much bigger. I really want to open this up for discussion between all of you. And I am out of the sea.
Let me just, actually, this is a much better story than what you are relaying. If you remember, early 2000 or even for that matter till 2010, every cement company that got sold in India was acquired, not every, almost every was acquired by an MNC. The inbound MNC acquisition was a big story in India. And actually it has reversed. You are seeing, particularly in cement and many other industries, domestic players actually acquiring the foreign partner, right? So the M&A, while it may not have been big news in terms of global acquisitions, I think the consolidation within India has been a big story, right? And particularly, actually, in many cases, the Indian partner buying out the MNC partner happened across industries in many sectors. That's number one, right? Number two, there are, we may not have this big bang M&A, but the number of acquisitions that Indian companies are executing outside India, right? I'm talking about global M&A. They may not be, other than IT services who have just done a bunch of transactions. But there are a lot of small acquisitions that Indian companies are doing, right? And I can just talk about one or two where these are not meaningful numbers, but a company that is 200 crore revenue going and buying a very strategic aerospace player, which is only $15 million revenue, going prompted almost by a large customer of a common customer to both the companies, which in turn then raises the opportunity to, because certification, entry barriers in some of those industries are very high.
your ability to, through those acquisitions, then position yourself as a, you don't become global, but you kind of sow the seeds for kind of building on it and kind of getting that confidence and build. And there are a number of particularly private equity backed companies doing small bite-sized acquisition which position them strategically either from a customer relationship, market entry, in some case certifications. I think that's kind of happening in quite a big way.
Before actually invest in one of the most exciting industries in India today, which is renewable energy, correct? Eversource is hugely invested in renewable energy. But before I come to you, one point, about technology transfer is like opening a sweet shop with the guy who makes the sweets and you don't know how to make it. So if he leaves, then your shop is closed, right? It has happened also. Tell us about the renewable energy industry. It's we keep writing about it at Mint. Almost every day there's a story on deals happening in renewable energy. Companies are scaling up really big time. What is the scenario there? What are the challenges? And are you really seeing big companies coming out of there? I mean, global size big companies.
I think we are getting there. Another one of the success stories on the renewable side for us as a country. We have done pretty well on solar installations, and I'm glad we started when economics was just not visible. Over time, it became visible and the scale increased, and I think that momentum continues. And frankly, it was the need because we all need power, and better that it comes this way. Um, have we been able to create the size of the companies that we would have liked it? Probably no, but that is partly because as an industry structure or as an industry attractiveness, one, it's a very, very capex heavy industry and the returns are very moderate. So no one individual or promoter group or private equity would like to own a very large franchise. But as a country, I think we have done well on the renewable side. But I think to your earlier part, we over pivoted on the discussion towards large corporate acquisition, which we all said that we have done a fair bit and probably more is happening. But what was more intriguing, Alokesh, to me was what you said about the emerging champion like Motherson Sumi. That has not happened to the same extent in a lot of other industries because that was literally taking business from other economies, bringing it to India at size and scale. And probably that happened, obviously, the entrepreneurial zeal, but that should be available in all sectors. Is that for us, auto industry was an established domestic industry, and hence there was room to transfer business here. The pharma and the chemicals are finding its foot on the domestic side. And once that happens, and now it is happening with, you will see a lot of European assets coming to the Indian corporate, particularly on the chemical side as we go through. So maybe it was that and the entrepreneurial zeal, but if there is something else even I would like to know. But that's a very relevant example. I did not think of it that way, and half of the time I think of M&A.
Matthew, where should we invest? Are you looking for scale when you're investing? Are you looking to scale when you're investing?
See, we are a very small firm. We are not even organized private equity.
You come from
I'll talk about that. But I think the opportunity, the way I see it, I think it is the opportunity to create, start with a small company and build a large company. I think it's a 7-10 year journey. That's where I find actually exciting, both from a return perspective and even from, what excites me at least personally. I'll give you a little bit of an example of Gokul, which is always been a bad story for many years. It's a company that lost money every year for 10 years in a row, right? And we bought the business, obviously great CEO, Birla idea guy, a classmate of mine came to run it. It took several years to kind of build the platform and, run it on a consistent financial performance basis. But post that, come 2022, we said, we have been 1,000 crores revenue for now 12 years in a row almost. We have to change our gear, and both in terms of, we had done kind of whatever we could do in terms of existing business, efficiency, cost. So we reached some level of profitability. But we said we really need to build for the next How do you take the business to 10,000 crores from here, right? And I think M&A was the clear answer, and some organic growth as well. So we went and bought a small business in Africa, Kenya and Tanzania, owned by an Indian gentleman, like a $50 million purchase, with a very clear understanding that that kind of gives us some kind of duty benefits, and some of our customers, large customers, are looking for duty benefits out of Africa. And there is a lot of pull from US companies to source from Africa. So it met some of those soft kind of issues. And also we got a new product line, which was a children's clothing, right, which we were not a big. So that we did that. Immediately after that, we said our other kind of portfolio gap is, high embroidery, high value clothing. So we went and bought a company in Delhi called Matrix. Again, a $50-60 million purchase, actually run by an IIM Ahmedabad 1985 batch guy who just started this business, built it, just sold and retired. Then we said, okay, we are filling our gaps, but how do we kind of backward integrate? And we got an opportunity to acquire one of the large processing facilities, which probably, if you want to do a greenfield, it may take 5-7 years to do it. And one of the distress assets that JM had acquired, we partnered with JM, we bought that business from JM. It's still in the works. It is still just about to break even. It's only 3-4 months. But that gives us, obviously, backward integration and really a seat at the table with the big fashion houses, because the real fashion comes not in terms of design and sewing. It comes from the material and what material do you develop, and you kind of partner with. That's where the real partnership happens. So these 3 acquisitions all executed in a matter of literally in 9 months, right? A small company went and did all of these 3 acquisitions simultaneously, which kind of positions ourselves for the future. So a company that was doing 100,000 crores a year, obviously it's a public company, we may do 1,000 crores this quarter. And we have a run rate to become close to 1,500 crores in next year, when you combine all of this. So it gave us fill product gaps, gave us access to certain customers because of taxation, duty structures, and it got the backward integration and the ability to engage with our key customers at a very, very senior level. So these are the opportunities that we see where how can you. And by the way, Vishal advised us on all 3 transactions. So
that's why I'm going to Vishal next. Your take on the same question.
And as Mahesh rightly pointed out, not a better time for Indian companies to be more acquisitive. You've got the multiples, you've got the access to capital available, especially on the equity side. There was a time when equity was a challenge, and now equity is available at good multiples. But again, I come back to the point, as Matthew rightly said, you need many more champions. We have, say, 500 large companies, but we need many more champions if we have to really deliver this kind of growth. If we don't have 15, 20, 30,000 companies being created and becoming billion-dollar enterprises, we're not going to meet these GDP growth, these goals.
That's true. Mr. Chavria, we were talking about, and we spoke yesterday, and we were talking about how large organizations can get into new areas faster, right? Because they have the capital, right? And then they have the efficiency. So a JSW can get into automotive, but tomorrow if somebody else wants to get into automotive, it's not as easy. So in addition to putting up a lot of MSMEs, the other way is for large organizations to spawn a lot of smaller businesses in newer areas. What do you have to say to that?
Let me explain to you. To think that you can manufacture everything in-house is a myth. There are certain efficiencies some other players have just because of their size, scale, quality, whatever be the parameters. You got to take a call and say which of the players on my supply side back end I need to back and I need to buy out. Now, to make him invest together with you, you got to give him a commitment. All of us have actually compressed the number of players from whom we source. Each one of us is dependent on quality, timely delivery, assurances. Now you call ESG sustainability, we got to invest. If we invest, if our backend doesn't invest, we aren't going to be competitive any which way. So you therefore have to ensure that your control on your supply chain is that much more tighter. When I say tighter, it's not just merely supplying. What are you doing to invest in him, in his people? He is not going to be able to scale if you are not able to handle it. Today, that is the need of the hour. And that's the way the MSME journey will actually kickstart itself, because when I do hope that what Vishal said turns out right. I don't think there are so many entrepreneurs in the MSME space who think in the way that we think in the formal sector. They are still informal, small in thought, small in terms of availability of capital, small in terms of attracting talent. Now, talent is fungible because it's not going to stay with him if he doesn't pay, and if we pay, he's going to move. How does he ensure that supply chain therefore doesn't get constrained again? And there are various other factors. Like one of the things that we've been telling Niti Aayog, and it's true, the cost of compliance for MSME and all is high. Relative to the size of this, they play, it's high. Matthew will agree with it. There is no way you're going to be able to reduce it. Now, you've got to take a policy measure and say, we want to make them survive, reduce some of this. Okay. Now, it's not just the cost of compliance, the cost of non-compliance, even though minor, has manifold repercussions, even on us. If he doesn't comply, even on us. So you can imagine, like, what are we really up to?
I would, if there is a question from the group there, anybody has a question, we can take one. Otherwise, I will end it with one final question. Amit?
If you cut through data and just don't know anything about this country, you also contrast it with the US. I think if the swings happen in the government, it happens much more in the US versus in India, right? Political stability, regime, talk about cost of regulation. And I'm not being pessimist on India. I'm just trying to put another picture just to make this more provocative. To take a company public in the US is a $5 million expense. To run a public company in the US is an annual $1 million. We spend much more in India. I mean, that's at least the part of the market I understand. And same for other regulations. Lobbying is almost legitimate. You spend a lot of money out in that country. But I think one thing which keeps it going is innovation. Right? Is innovation. Fundamentally, your 4 companies, you created an NVIDIA, you create Apple, you create Google. Where is the India Inc. or the government? I mean, I'm a bit surprised that on the table there was no discussion around there should be massive corporate tax subsidies or proposals around innovation in this country. There's not a single product company which has come out of this country. Where is that foundational element around innovation at a corporate level? Where is the IP being created in India Inc.? And where is the skill being created in the 1.4 billion people? So would just love to hear some thoughts there.
Yep. The question is, I think Indian engineering talent is in the banking sector and the financial sector. Most of my classmates in IIT ended up there. So that's why the financial sector and the IT sector are doing great. So I think that if I'm hoping now that, with Trump's immigration rules, most of those engineers will stay back in India. And if they work in Indian companies, maybe we will create, because an Apple or an NVIDIA was there, I don't know, 25, 30 years ago. It didn't start 2 years ago. It just got its time in the sunlight because GPUs became popular. So I think that the difference between many of these sectors and the companies that you mentioned is that engineering is also a culture. It takes a while. You have to have people who are there, who are innovating and have been working on it for 20 years. And then suddenly you get something and you say, wow, how did NVIDIA make a GPU? They didn't just do it today. So this investment in technology and engineering on a very consistent basis, we will have to do it. And the problem with R&D, most of the people I work with are chartered accountants, and they say, where is my return on investment in the R&D on a yearly basis? You don't get it on a yearly basis. So that's why that nobody invests in technology. They rather invest in a company that, I don't know, make jewelry and give you a multiple and you can make your return in 2 years.
I think it's going to change very fast is my belief and my hope. And if you just see the US, and I know you've studied the US markets for a while, so have I a bit. I think what happened is, see, the US is a rich country and has been rich for a very long period of time. And a bulk of the innovation started because of corporate venture capital, as well as wealthy families who a couple of decades ago exited their businesses and put money into venture capital. And they actually encouraged innovation. Second, it being a rich country, your payoff on a new innovation is faster. If you're spending money and you have 50 million people who can buy an Apple Mac or an Apple iPhone immediately at a certain price point, which gives Apple that margin, it's just easier to put more dollars behind innovation faster. And you had rich family office which morphed into funding venture capital funds from angel to venture capital, which took the risk over 4 to 5 years to create that innovation, which was paying off again within that decade. Yeah. And I think that's happening in India. India, I mean, generational wealth has been created in India in the last 5 years. India has not seen a stock market boom that it has seen in the last 5 years in the previous 50. When your market cap's like 5 trillion headed to 10 trillion, you will see that kind of investment coming from family offices. They will pour money, right? Look at Zepto. A company like Zepto has raised $350 million. It loses money. It's disrupting rapidly, right? But $350 million raised in 2 months from family offices in India. Loss-making company. It probably will turn a profit a year or 2 years later. But that money's been raised in India. So I think it's changing very fast. And I think in 5 years, you will see a lot more innovation. It may not be the apples of the world, but you will see innovation that works for India.
And I'll tell you one more aspect. Most of us who are scale players here now, for the first time, are also willing to take bets from our own balance sheets to say how much do we invest in incubation funds, because we think with the size and the scale that we have, we are not going to be as agile as maybe a startup is. But will we take a bet? Answer is yes. If the bet succeeds, the product or the process, whatever comes out of it, is ours, and we will partner. It will make that enterprise or the entrepreneur rich. Third, wealth also leads to a percolation effect where people want to start giving back to society. So I'll just give you a few data points. It's there in quite a lot. But just look at the last 5 years and see how many Indian corporates have started contributing to give back, either in terms of back to IIT alumni, campus building, innovation, joint venture innovation labs. So that exercise is already underway. And you will see this play out, trust me, in the next 5 years.
Even, we have started investing as JSW and IIT, as he was saying, you need an enabling ecosystem. It's not only one is a talent which is migrating to US because the ecosystem there is much better. The funding there is much better. Now we have started creating, and IIT is encouraging that. You can, they are making buildings, you can contribute to that. So engineers will be, I would say that inclined to, let's say, do the innovation or do the R&D here in India. But you need to have that ecosystem. It's not been there earlier. I think steps are being taken. But yeah, I think we still have a journey to go.
But I give you 2 examples. So we do a lot of focus on research in the hospital and global research and Indian research. So there has been a treatment developed in our hospital by our doctor over last 20 years, which has now become the global standard in treatment. So that eliminates surgery in one application. So that's one example. We've also been working with the IITs where there are products being developed for Indian market with us collaboration, and we test it, etc., etc. So there's a lot of work going on it. I mean, IIT Bombay, IIT Kanpur, a lot of work going on there. So in healthcare, at least I'm aware that there are 2,500 startups. I don't know how many will succeed, but who knows? But there's lots of things happening.
Thank you very much for the question, but like I said, I will have the final say. So my point of view on Amit's question. See, the way I see it, and you are all very big people, my son is an engineering student, so I can see it from his point of view. What do we as human beings who are not CEOs, but rather, aspiring people look for? We look for a good salary. Yes. The salaries of managers are way higher than engineers. You are never going to get the best engineering talent in engineering if you continue to pay your salespeople more than your engineers. That is the fundamental truth. Tomorrow, if I want my son Who's the richest man in the world today? He's an engineer. Elon Musk. He's an engineer. He's not a manager. He manages his own companies, but he is an engineer. He's the one who created SpaceX. He created Tesla. We don't have that environment, like you said. We don't have that environment in this country because all our companies pay more to their salespeople than they do to the engineers. So tomorrow, if I tell my son, beta, be an engineer, build something, he would say, लेकिन daddy, मेरे को तो पैसा उधर ज़्यादा मिल रहा है. Why should I remain an engineer? I will go to the IIM, do an MBA, and I'll get 4x the money here. What are you talking about? I'm a middle class guy. I need a future. I need a family and all that. That is the truth, you know. So we got our priorities all inverted, right? You have to start paying your engineers. We do more than your salespeople. So now, which is great.
We actually, I said, we won't hire NBA.
Yeah, technical leader forum, separate, as you're rightly saying.
Wonderful.
Yeah, that has to be done. Otherwise, you won't.
So, you know, otherwise what happens is our best engineering talent either goes overseas or they go to IIMs and start selling soap. Which is really not good.